hope you're all doing great. My name is Marcello Kolex. I'm the technical analysis guy for the European energy markets, and today I'm going to walk you through the markets. We'll have a look at what happened last week. We are looking at all the bullish reversal setups that we are having across the charts, and we'll have a look at how likely all of these bullish setups are to work out, or if we're simply going to continue lower. But before we get into the markets, here a little disclaimer: nothing you see here constitutes real trading advice. It is just my humble opinions, of course. So everyone who already is a Clever Markets customer will see this broad update for today. I'll just make myself a little bit smaller. There you go. So we understand that all markets have more or less, on the European energy side at least, have abandoned their firmly bearish stance, and we are looking a little bit more neutral now, because yeah, the bears look exhausted, but the bulls are not fully in charge yet on the hourly charts. However, on the daily charts we are still fairly bearish. So here the assumption is that we might be set up for a temporary corrective move higher before overall we continue lower. What that means for each chart, we'll have a look in just a moment. Also, I want to share with you the TTF sentiment poll results that we just got in, and I am I surprised? I don't know. But we definitely have abandoned last week's firmly bullish stance, and we are now a little bit more evenly measured. And that kind of makes sense. With last week, the bulls were completely disappointed with the market firmly pushing lower, and being disappointed is probably a nice euphemism. Probably devastated with the price simply moving lower without hesitation. But at the end of last week, we saw a little bit of a potential for a bounce. So that's why maybe at the start of this week, we are more balanced. So there's definitely more bears in the market. There's more of an indecisive, no opinion wedge coming in, so there is more people on that side. And of course, the bulls are overall still dominating, but I don't really see it. So I definitely am aligned with a marginal push higher at the start of the week, so absolutely. But beyond that, I am still rather bearish overall in the grand scheme of things. And this here is what it means for the charts. So we see on the TTF front month, the NBP front month, the TTF front season, and the NBP front season. We do have EUAs, we have Brent, we have what is this? Henry Hub, and we do have German power. And you can see that all of these here are having this, after the red candle, we have a little bit of a green candle. So all of these are called bullish piercing line patterns. So these usually set the market up for a bounce. But what we need to see for all of them in order for the bounce to happen is a move above this red candle here, because only then would we confirm a bullish corrective move higher. On the German power markets and on the EUAs, we see that we have something a little bit different. These are bullish engulfing patterns. So we can see after a small red candle, we have a bigger green candle engulfing the range of the previous red candle. So this as well is a bullish signal, and we need to see a close above this pattern in order for the bulls really push through with a corrective up leg. But for all of them, as long as the corrective moves higher, top out below the peaks, the preceding peaks, then we still have a good chance at eventually continuing lower. And before we move into the TTF front month in greater detail, here just a little announcement. First of all, thank you very much, everyone. If you're watching this, you are probably subscribed to the Clever Markets Market Watch newsletter that is published every Monday. And this here is like the very first cohort. It's the very first newsletter. So thank you very much, everyone, for subscribing. I hope you're getting great value out of this. Now, I have received a few questions as to why I'm doing this in the first place. So my answer is not as selfless as you might suspect. So Clever Markets is a business that helps institutional energy trading desks with making better trading decisions, and I do that with technical analysis. And before you get there, no, this is not just a course and it's not a newsletter. We are actually getting into the weeds. We help you truly apply best technical analysis practices. We give you the education, we give you daily market analytics, you get one-on-one access to me. There is a million things essentially to ensure that your team is truly implementing technical analysis. Trading desks that already have good fundamental models usually perform the best, because then we can take these fundamental models, we can start applying even more precise technical analysis, and we can combine these two into a coherent system that helps you squeeze more value out of each and every market move. Experience has also shown that those trading desks that already have some technical analysis experience, maybe you've done a course in the past, those are able to get the most value out of the Clever Markets services from the beginning. But hey, no worries, if you're completely new to technical analysis, we've got you covered. We'll pick you up exactly where you are and we'll elevate you to the next level. In front of us, we have the TTF front month, and here I just want to start on the weekly chart as always. Zoomed out, we have obviously broken past the ascending channel that has been directing price moves since February 2024, so over a year. And look at this, we had an earlier potentially bullish reversal candle with this hammer here at the support level, but even 2 weeks ago or 1 week ago we said this whole thing is probably more likely to continue lower, and that's exactly what happened. So for those traders that are a little bit more brave, they might already take this as a mid-term bearish confirmation, and those who want to wait it out a little bit longer, they might want to wait for a break below the 38.88. But anyway, we would never make any trading decisions on the weekly chart. For that we use the daily chart, and here we see the same channel, we see the flow of lower lows and lower highs, and we have marked out the area of the bullish piercing line pattern, right? Stochastic usually helps us assess the likelihood of a pattern to work out, and we would have gotten a bullish confirmation signal above the 20 level. So if we move above oversold territory, hasn't happened yet, but this whole candle formed on high volume. We are no longer making we are making a higher trough. So I do believe that actually there's a chance for us to cross above 42.2, which would then launch a corrective up leg. And it is unclear how high we can get, but as long as we top out below this peak here at 47.3, then ultimately the bears still have a good chance at eventually continuing lower. I want to keep an eye also on this channel pullback resistance near 44.5. This could help us to maybe just put in a lower peak before we continue lower. Now, what is the alternative? So there's two alternatives I want to talk about. One is simply a little bit sideways for the week, for the first half of the week, just a little bit sideways. But ultimately, there's still a good chance for us to continue lower. And you can see our option 1 and our option 2, they are both eventually still pointing lower. So what will happen at the start of the week on Monday? So this little bit, for that we look at the hourly chart, and the picture is not as certain. So earlier I mentioned that the bears look exhausted, and I came to that conclusion because this intraday down channel is we no longer touch the lower boundary of this channel. So this reaching failure essentially is like an indication for the bulls, for the bears to be exhausted. The bulls aren't really in charge yet, because for that we need to move above the channel near 4185. So we are in neutral territory, more or less. If we cross below 38.3, then the bears will be given a chance to continue lower, and they would also undo the bullish setup on the daily chart. However, if we push above 40.56 and then 41.85, then I want to say the bullish setup on the daily chart is very likely to play out. So what are the tools saying? So here we see that the MACD, the momentum tool, has given us an early bullish crossover, but the bulls would only be fully in charge above the zero line here. We are still far away from this, so that's why the bulls aren't in charge yet. I also see that stochastic topped out as the market topped out at the end of last week. So this is kind of looking pretty toppy to me, right? So I wanna see what happens here. If we push below 38.3, there still is a residual chance for the bulls to eventually continue higher. All I want to see is a trough above 36.4. If that happens, the bulls still have a chance to continue higher. But please do keep an eye, or keep in mind, that this whole thing could develop into a very painful sideways trend. So that's why I want to keep an eye on this. If you start a sideways range emerging, if you start seeing that a sideways range emerges, give the 15-minute a chance. Maybe if you have to, if you're so inclined, if you're a daredevil, maybe you can make use of the even smaller swings there. Right, so that was all for today. I hope you found that useful. If you do have any questions, just reach out. Of course, my name is Marcello Kolax. You can find me on LinkedIn if you choose to do so. Connect with me. Sign up to the newsletter if you haven't done so already. If you're getting value out of these free weekly updates, then I promise you the Clever Market services might be the right thing for you. But we have to have a conversation first to see if you qualify, because we must ensure that you do have good fundamental models running. You do have some TA experience, or at least an interest in TA. No worries, we'll get you to the right level if not. And also that you're an institutional energy trading team. Until then, everyone, have a good start to the week. See you around, and bye bye.